Well, good morning, everyone. David Paul speaking from VectorVest. I've entitled Short Talk Banking Woes, Debt Ceilings, and the Fed. Clearly, the big thing that we have to consider today is the Fed tonight. It's coming, their news is coming out at 7 p.m. UK time. Everybody expects them to put it up by a quarter of a point, but the big thing will be the forward guidance. So in the wings, we've got banking woes, banks going bankrupt, and we've got this whole specter of the debt ceiling coming on us as well, the US debt ceiling, which will be certainly reflected across the side of the pond if it goes into a long and a tedious debate as did the last one. So if we have a look at the UK, and what we're looking at is a chart of the VectorVest composite of the UK. That's an equally weighted index of all of the 2,000 shares that we follow in the UK market. That's over the last, since the start of last year. So what's that now, about 16 months? For the last year, the index is going sideways, and we'll see in a second in the US pretty much the same thing. The longest term measure of the trend turned down yesterday, in fact, so that little kick up that we've seen that lasted a couple of weeks has come to nothing. There's still more companies on a sell recommendation. There isn't a buy recommendation. So the advice is to be very, very, very careful out there. Certainly not sell the stocks that you've got, but we must watch stop losses on those stocks very carefully indeed. I have some recommendations in a little bit that I think look quite good, but nevertheless, we have to bear in mind that the direction of the overall market is down, and we should probably do our best to sit in our hands until that changes. US market, in fact, the longest term measure of the trend has been down for a couple of months now, and the American market, in fact, was weaker than the UK market and didn't reflect a change in trend as it kicked up over the last couple of months or last 6 weeks. The buy-sell ratio, or the breadth of the market in the US, hasn't come to the party at all, and it's still sitting at a mega oversold level at about 0.22. Anything below 0.25 on the buy-sell ratio reflects a mega oversold situation. And those of you that are technical analysts can see that that trend line that I've drawn, or neckline, if that's breached, that in fact would be quite serious for the market. Many very important and influential strategists still calling the US market much, much, much lower. And certainly we could see one last quite hard move on the downside before this bear market is over. So just be very careful out there. I still have a position in the QQQs. I'm watching it very carefully. This is a tracker that in fact follows the NASDAQ 100. I bought into it and added to it last week as it went down and took out that low. That's the setup that I teach at VectorVest UK based on the work of Richard Wyckoff. So I have a position long in the QQQs from the breakout of the flag pattern, and I added to it last week sometime. And stop loss is well above the entry point. So have to watch that very carefully today. What I'm reasonably pleased about is the GDX, the gold market, looking very strong indeed. And the GDX moving up quite strongly. So, I think that all of you listening should look at some gold stocks. I've decided that the index is the tracker is the best place for me to be, and I have a position in the GDX. If it breaks up through that last high, I shall add to that position. So on the UK market, this is our top stock by VST, Value, Safety and Trend. It's called Kitwave, small, a relatively small company. And as you can see, it has been trending up strongly as earnings were marked up. Recently, it pulled back from that all-time high in a flag-like formation and went back and kissed the last old top. It pulled back within the flag on falling volume, which is a very good sign. And it's now pushing up and rising volume. And those of you eagle eyes will see that from the low point of the flag pattern, as it pushed up, volume in fact expanded to as high as it's ever been in the stock. It's gone sideways for a few days on very, very low volume, another good sign. And yesterday it charted a outside day on fairly good volume. So that looks a high probability opportunity that can maybe buck the trend of the overall market. Nevertheless, they don't move as smoothly when the overall market is pointing down, but that's something for aggressive traders to have a look at. QQ, or Quintetic, is an aerospace stock. It's quite a large cap, and it's in fact broken out of this triangular pattern. And as you can see, within that triangle, earnings per share has grown strongly, and it gapped out of the trend line, which defines the top of the triangle. And when I see a gap out of an obvious trend line, I refer to that as the rocket launcher. So I have a position myself in Quintetic, as I have in the previous stock. So it's on a buy recommendation, and I think that that's got legs. It's defense stock, which is in the news at the moment. I'm holding a position in 4. I see it did well yesterday. It's off a little bit this morning. And I've added to that position, I think once along the way, bought into it as it broke out of the flag. And you'll notice that the stock, in fact, gapped out of that flag way back last October. It made its target from the flag at about £50. It pulled back into the range, seems to want to go again. On VectorVest, the share price appreciation potential looks exceptionally good over a window of 3 years into the future. And that's a metric on VectorVest we call relative value, where we measure the share price appreciation potential in relation to what a corporate bond will pay. And 4 has got an outstanding level of relative value. So quite happy with that position. This is Italia Mining. Now this is a copper stock based in Spain. It's on a hold recommendation at the moment. It seems to be charting this huge inverse head and shoulders reversal. I'm quite bullish on copper. I'm quite bullish on commodities across the board. I think that keep your eye on it. And if it breaks out of that trend line or neckline, which is in fact defining the inverse head and shoulders reversal, and moves to a buy on VectorVest, then that stock has got a target much, much, much higher. So that's one to keep on the back burner. So folks, on both sides of the pond, the trends from short term to long term on VectorVest are down. There's a big week of news ahead from the US. We've got the Fed today. We've got ADP today. We've got ISM services, I think Thursday. We've got non-farm payrolls on Friday. We've got the ECB on Thursday. So an awful lot, plus earnings coming out of the US. A huge amount of news that can move markets around on both sides of the pond. Got this debt ceiling, which is always a protracted, at least in my experience, has been a protracted negotiation. I've absolutely no doubt that they'll increase the debt ceiling after a month's worth of haggling. At least that's what's happened on the last couple of occasions. So prepare for some noise. Watch your stop losses very carefully indeed. Sorry, I haven't got something more positive to report, but those are the facts. Anybody that wants to find stocks like 4, like QQ, like Kitwave I like because of the price and volumes better than anything else I've spoken about today. But you can find those relatively easily on VectorVest. And if you want a trial of VectorVest, if you go to vectorvest.co.uk, you should see the 30-day trial there quite easy. So thanks very much, folks. enjoy the coronation weekend.